The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off about 30 minutes to go until the opening bell, and you got markets chopping around. We catch a little bit of a lift as I was coming on the air right there. NASDAQ 100 up by 10 points, and you see we're about 120 points off of the lows we were at early this morning, and even in the last 25 minutes or so. NASDAQ 100 spiked 100 points. You got some volume coming in at about 9 o'clock. You see that acceleration. S&P's, similar action. You trade lower overnight. Last 15, 20 minutes or so, you catch a little bit of a bid. S&P's right now positive by 6 points. Now, I say a little bit of a bid, as in the context of the move we got yesterday. Okay, you're talking about some action, man. Yesterday, 69.05 to a low of about 68.20 towards the end of the day. We're at 68.35 right now. Dow, negative by 48 points. You catch a little bit of a lift as well in the last few minutes. Down by 0.1%. The Russell, up by 0.2%. Bitcoin down about 0.5% off $485, 89,250. You jump over to Ethereum, off 2% at $29.49. Crude, $60.40. You back off a little bit at 8:30. You catch a little bit of volume at that 9 o'clock bar. We jump to yields, and basically at the lows of yesterday. Now you're talking about a 10-year right now that is approaching 4.3%. Right now, we're sitting at 4.293. 4.293. So right near 4.3% on the 10-year. The 30-year. All right, let's look at the yield curve for a second. Check this out. You got the 30-year, 4.93. Okay, we're pushing 5% on the 30-year. We're pushing 4.3 on the 10-year. The 2-year is at 3.58. Okay, that is 71 basis points of steepening, as in there's 71 basis points in between the 2-year and the 10-year. Just keeps getting steeper as long-term yields are going up, even as the Fed is coming into a new Fed chair. And we have Chairman Powell sitting front row at the Supreme Court today, supporting his fellow Federal Reserve governors. So there's a lot in action. Now, we haven't got to metals yet. How about it, man? Now, whatever just happened at 9 o'clock, all right, you had markets go up, you had metals go down. Okay, you got Davos going on today. You got a Trump speech expected at 2:30 p.m. Eastern time. Air Force One having some type of mechanical issue, about a 2-hour delay for Trump to show up in Davos. Nonetheless, that 2:30 p.m. Eastern time, okay, I believe is when he's going to be talking. Is that right? Is he talking right now? Yeah, he's talking right now. So that's what's going on, right? All right, we'll dig into the charts. You got gold. You talk about some volume, man. 48.64. Okay. Let's take a look at the volume. Look at the volume on these metal charts, man. 48.91. Seems like 5,000 is coming for you. Yeah, no, he's talking right now. I had 2:30 for some reason, and that's Davos time. No wonder I was hearing that. I said, what's happening? That's afternoon. No, he's talking right now. So there we go. Whatever he's saying, markets are trading higher, man, and we'll follow the volume. Look at this. Here we go. We're going to get some volatility today. You talk about it. Silver. Now, what's remarkable is you check out gold. Okay, look at the acceleration gold got from where it was even Sunday, where it was on Friday. Right, you were at 4,600. We came into Sunday, Monday, the market closed. You were at 4,679. We just hit almost 4,900. And silver, we're right where we were Sunday night. Okay, so silver had been the leader here, but silver can't catch a bid above this. As you're looking for a flight to quality, they're going to gold for a flight to quality, okay? And you silver bugs out there, longer term, yeah, this is quite an acceleration, and you're doing it with volume, okay? But shorter term right now, looking at this market and looking at this last kind of exhaustion that you're getting to the upside on gold, on a weekly basis, it's going to be very difficult to get above those highs with volume. Last week, you do 1.3. Now, these are epic days that we have going on in gold. But we got 4 trading days this week. Going to be difficult to get to 1.3. We'll see if it happens. You jump over the dollar right now. 98.50. How's that for a weekly bar? Right? Now, a lot of that taking place yesterday. You take a look at the 15-minute. We're just right back at the lows, and we got a little bit of a bounce right now with Trump talking in Davos. And there you go. We're catching a bid. We'll see if it holds. Yields in focus. We jump over the yen. 158.04. You take a look at that weekly. Yen yields rising, urging calmness over in Japan as they're selling their bonds, forcing yields to spike. And we got the yen this morning down about 12 pennies, 158.01. All right, we jump over to Netflix shares. Netflix after the bell last night, and it just keeps going. You're going to open at $81. Here's your overnight action on Netflix. Okay, we just hit a low at 80.38. It's been a slow, steady decline for their numbers. Since their numbers last night, I should say. And check out the volume, right? You got no buying whatsoever. At some point there's going to be a buying opportunity here, but you're about to open below the lows of the tariff volatility. That's bonkers when you think about it, right? Netflix goes from 82 to 134 over the period of 3 months, and we're going to be below the tariff volatility. Folks, the S&Ps were at like 4,800 at those lows. Okay? Look at where the S&Ps are. So you got some weakness going on. You got lows out there. You're opening below any of these lows earlier this year. We'll see if they hold. It's a critical area. You don't hold here, where are you going to? You're probably going back to this October bar of 2024. You got a high of $76. I'd be surprised if you break this area, which you have, maybe 76. That's the next stop, man. That's what sticks out on this chart. But it was a one-way trip from $33 up to 110. Now you're breaking the lows of 2024. The lows of 2024. Think how far the market's come since then. You're going to be dealing with 2023 prices on Netflix right now. It's a great company, but expectations are everything. All right. We're getting a lift right now. The president's lifting the market. Here we go. S&P's up by 28. NASDAQ up by 81. You get the Dow up by 83. So he says he won't use force to acquire Greenland. We're not going to start invading on our allies. That's good news, and the market rejoices. There you go, Davos. All right. It's going to be a wild day, folks. We got so much happening, whether you tie in, of course, the president talking in Davos. He's refuting that we're going to start invading our allies. As you talk about balls in play, man. You got gold up $83 right now, but we are $40 off of the highs already. It's going to be a wild day in the markets, folks. We're talking to our man Teddy Kegstad at 40 past the hour. Come right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. We got a little bit of a risk on with the potential for escalations with Greenland de-escalating, and there's your VIX from 2080 down to 1879. And what I will say is, folks, okay, and you're seeing it play out this morning, things seem a little bit wild right now. When you look at the VIX, when you look at metals, when you look at the fact that there's a Supreme Court case that they're going to be hearing oral arguments today, and you have the chairman of the Fed sitting front row. You have Trump talking in front of Davos, refuting that he's going to attack an ally of NATO. Point being, right, I feel like there's going to be some calmness here. We are going to get a new Fed chair eventually, okay? The Powell headlines hopefully will subside because he's going to be no longer the Fed chair regardless come May. Hopefully Greenland de-escalates, which you're seeing this morning. And some of the volatility in play could ease because it's not going to happen in terms of home ownership where we are right now, man. This 10-year, okay, now you're seeing a little bit of a lift, right, on those comments, higher price, lower yield, but we were approaching 4.3%. But in terms of where we are on the risk spectrum right now, things are aligned to be risk off right now. And I'm hopeful, okay, but I think we are when I look at the potential for escalation. I mean, how do things get worse on Greenland? We actually attack them? That doesn't seem like that's going to happen, right? So how do they get worse? Everyone was talking about, are we going to attack a NATO ally? Well, the president says we're not going to attack a NATO ally, all right? So that de-escalates. We have the Supreme Court here in a Federal Reserve case today. You have Chairman Powell under indictment. Regardless, we're going to have a new Fed chair. Come May, the president's going to pick that person. And hopefully that noise goes away because it shouldn't matter. We're right on the cusp of getting over that. And then you factor in what's going to happen with the next Fed chair. So Powell's got 3 meetings left. Okay. The next meeting a week from today. He's not going to be at the Supreme Court in a week. He's going to be on a meeting, and they are not going to cut at that meeting. Okay. He's got 3 meetings left. The next Fed chair has 5 meetings this year. 5 meetings this year. So we're going to get on, the market's going to start forward looking. It's almost February, and that new Fed chair is going to be taking that helm in May. So another way of saying it, okay, keep your spikes up. I think that we're going to see lower rates coming at us throughout the focus once we get over this hump. And when that happens, you're going to see some pressure on the dollar, even though there has been pressure on the dollar. And that's going to be wind at gold's back. But really, I was talking to a friend yesterday, and I was just saying, gold and silver just need to breathe a little bit. You know, we've had one breath, which was the October pullback. And yeah, we had the pullback into New Year's, okay? But folks, you're talking about a run from 3,300 in August to 5,000. 3,300. What was the low? 3,353 to 5,000, okay? And silver is even more pronounced, of course. And silver, that run goes from 45 to 95, right? You're talking about a period of less than 3 months, 45 to 95, okay? And boy, you talk about that escalation. There is volume here, and that's what the ideal setup is. You get a nice pullback. Now, we're going to have some rip-roaring pullbacks eventually, folks. Hard to step into this market right now, okay? Hey, and yeah, some of those equities, right? Goro. We talked about this on the afternoon program with Tim Ward yesterday. How's that for some volatility, man? You were up huge yesterday to 149. You're at 184 right now. We jump around to some other mining equities. Vista Gold, 232 right now from 227. You take a look at this equity. We got a double top here at 247 back from September. Okay, and this is just illustrates a bit though, in terms of how speculative some of these tiny companies get. Now, Vista, on a longer-term perspective, yeah, I love it. My dad loved this equity, folks. You're only talking about a company that's worth about $300 million. Come on, populate in there. About $300 million where we are right now. 294, okay? $294 million, very speculative. Tiny miner, but you can see sometimes this volatility, and you're seeing it play out. And, boy, metals, yeah. We got a $40 pullback. The market's rejoicing today. Okay, be careful in this metals market, man, because we might take back everything that just happened when you look at the escalation in Greenland over the weekend, right? You have a 3-day weekend. You have tariffs that come out. The tariffs are still there, but there was this ambiguous threat, like, well, the hard way or the easy way, right? And at least the hard way is off the table, and I think you're going to see some of that abate. And boy, if it does, you're seeing the market react. I mean, we got the NASDAQ 100 right now. Yeah, we're up 200 points from where we were when I was coming to start the program. 200 points. You really haven't seen a real move in gold. You're off by $35 off the highs in gold. You're right back to where we were in the overnight session. You're right back to where we were at about 8 a.m. yesterday on the NASDAQ 100. 8 a.m. yesterday in gold was $120 below where we're at right now. Yields are right there as well. Be careful in this metals market, folks. I love it in the long term, but we are getting a little parabolic, to put it lightly. And you do those, so what's happened now? Well, yields are right where we were yesterday. The market's right where we were yesterday. And gold and silver are dramatically higher. Not silver, actually. Yeah, not silver. Still gold. Whew. Look at this, man. Maybe it's got to ring the bell for 5,000. Very possible, for sure. All right, we jump over to Netflix. So Netflix shares, catching a bid with the market. You're up to $82 from a low of almost $80 this morning. Now, as I mentioned, right, you're going back into we're going to open at 82.38. We're right at these lows. 82.11 was the low in April, and 82.35 was the low in January, both of last year. Now, what I love about a trade like this, folks, is, okay, look for this area to hold. If it doesn't hold, you're wrong, right? You have this nice sign of strength out here from January earnings. You have the week of January 13th, and then you get that acceleration on their earnings a year ago. Wait 1 second. Okay. And so what you do is you enter a trade like this, your back's against the wall, you got a nice sign of support here, okay, you got a nice area of support, and you just put your stop on the other side. Now this thing may blow right through there on the open, but guess what? You got a nice area of support, and as I talked about, you trade lower, yeah, but you just traded from 134 to 87, and you're testing the COVID lows, the tariff lows of almost a year ago. And yeah, we jump over to Netflix. And we'll talk about this when we get back from the break. I mean, you talk about some numbers, man. How about this revenue per year? Look at this. You come into COVID at 20 billion, and they're now pushing 50 billion. Time flies. That's 6-7 years ago. But 20 billion up to 51, and that is a nice linear trajectory. Global base of subscribers, 325 million. We'll talk about some of the numbers on Netflix when we get back as they're going after Warner Brothers Discovery. That deal all cash now. Warner Brothers, $28.35. Paramount Skydance, $11.54. Their aspirations for Warner Brothers seeming unlikely. Markets in the green with the president talking in Davos. We're coming back for the opening bell, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got S&P up by 21 points right now. NASDAQ up by 45. And yeah, we have some of the give back from the president talking, but nonetheless, a little bit of de-escalation with potentially invading Greenland seems to be off the table, at least for now. Russell up by 0.9%. We jump over to yields right now. The 10-year Yeah, sitting at about 4.29%. You jump over that dollar, as I mentioned. We're talking to Teddy Kegstat next segment. We'll talk some currencies. We'll talk some commodities. The dollar down 15 pennies at 98.49. And you check out Netflix. There you go. Look at that. All right. It's just an area of support, folks. Okay, sometimes you don't have to be a rocket scientist. Don't make it harder than it is sometimes. We have nice support at this area. You're at the back at the lows of 2024. You trade through that area. You're wrong. Set a stop. Don't give it a lot. Maybe you give it the pre-market. You break through there. We're in trouble, right? And if you break below there, where do you put your stop? I don't know, so I put it right there. Don't give it a lot of room when you're at these critical areas, because you break below there, I don't know where you find a bid. You find a bid somewhere in this bar, probably back to October of 2024. Can't believe it's 2026, right? So Netflix is down by 5% right now. Okay, we jump over to their numbers, and as I mentioned, you talk about some revenue growth, okay? Dialing down content spending is not an option, though, when you talk about profits, and that is probably the problem with this equity right now, okay? They're going after Warner Brothers Discovery. Paramount might keep battling them. Maybe that's not Paramount's best and final, right? Maybe they bring it again, and maybe they got to jump up in terms of maybe Netflix wants to pay even more, and it seems like Netflix is going to pay whatever they got to pay to get this asset. 325 million global subscribers. They admitted in its shareholder letter yesterday that engagement took a hit in the latter half of last year because of lower volume of content it licensed from other companies. This is everything. Imagine that they're putting this out at the same time they're trying to pay almost $100 billion for content. Market research estimates that the company's share of U.S. original content viewing time fell below 60%, a new low. They can raise prices, but of course, as they're trying to make an acquisition that many argue is anti-competitive, Netflix is the number one streamer. Warner Brothers, okay, HBO Max, number 3 streamer. The number 2 is Amazon. They're not even a streamer, right? So in terms of those two competing, of course it's anti-competitive. Nonetheless, yeah, are they, you're going to jack up prices right now? No, they can't do that, okay? They need more original content, people that want to view it. And this is a problem. $11 billion in free cash flow this year. The market was looking for 12.1. Revenue grew 16% last year, but they only see 13% growth this year. Pretty remarkable, these public companies, right? You show 13% revenue growth, and keep in mind, that is 13% revenue growth on potentially $45 billion. And realistically, okay, that growth rate, 33 to 45 over 2 years, that is going to be very difficult to replicate because they're doing it with ads. One way to do that, it's like the Google build-out. This reminds me of Google. When they were selling all the ads, they said, we just need more places to sell ads, right? Let's buy YouTube. We'll sell all the ads for people on the videos. Let's buy AdSense, right? We'll market a... They just needed more eyeballs. They had the ad revenue, and now it's Netflix. They have the mechanism, okay? They have the system in place. They just need eyeballs, and they'll capitalize. But it's going to be very difficult to replicate that growth because it was a period of time where they transitioned. You see this revenue growth when they weren't selling ads? 30 billion, 31, 33, 39, 45, right? They added $12 billion in revenue yearly over a 2-year period. Yeah. And it took them from 2019 to 23 years, almost 4 years, to add 12 billion, and they do it in 2 years. Going to be difficult to replicate that growth, and there it is, right? 13% growth on revenue. Hey, in the long run, though, I'm watching this equity, man, because I think they are going to get Warner Brothers, okay? And in the same way, it's all going back to the way we've always done it, folks, okay? You look at the business model for Peacock. Peacock charges barely anything to sign up for their service. I think you can pay like $30 a year, right? I think it's $60 a year. They get you in with an introductory offer of 50% off of the entire year. Why? Because they just want to sell you ads, and that's how they're going to make the most money. Netflix is going to that business model. You look at Facebook, right? Facebook isn't the company they are if they're charging consumers. Think about it. That's the business model shifted, and yeah, you're talking about a company in Netflix that's currently valued at $352 billion. So yeah, they got expectations, and they're about to spend almost $100 billion to purchase Warner Brothers. But realistically, that's the business model, man. Ads, and you see that growth in revenue, and yeah, they might not be growing at the same rate that they grew at when you transition to that ad market. But that's that's the way it works, man. We're going right back to the age of ads within everything, and you're going to be able to pay a premium service. But boy, that premium service is going to go up more and more, because the more they make on ads, the more they're going to charge you for no ads. It goes hand in hand. And yeah, watch those lows that we had in 2024, though. We're right at that level, and you break below there. I mean, you could be at 2021 highs before you know it. It's only $70. I don't see anything else. It was a one-way trip from $16 to over $100. You break below this level, and as I mentioned, maybe you're looking at 2 years ago. Whew. You're at least going back to this October period, which could be as low as, the low from that bar, $67. So don't give it much room, man. You break below that area. We're at 83.11. Netflix got lows of 82.11 in April of last year and 82.35 in January. All right. Check out NVIDIA today. Jensen Huang, he was over there talking in Davos saying that we need trillions for this build out, man. Interesting that he was talking about everyone's worried about jobs, he says, but you're going to have plenty of jobs to build out the infrastructure, whether you're a plumber, electrician, a trade worker, right, making six figures. I listen to that, though. I say, man, if the only jobs are going to be labor building out data centers, where does that shift to? I mean, he's probably the most biased man in the world of arguing that AI is only going to be for the good. And I see that, and I say, yeah, you better believe there's going to be plenty of trade jobs, okay? A lot of the GDP growth going on right now in the country is data center build-up. But guess what? That's where the growth is, okay? That's how it goes. But boy, not really reassuring when he says that don't worry about it. We're going to have plenty of jobs for all the people building out the data centers. What happens beyond that? Does it go beyond that? I don't know. All right, markets rejoicing. S&Ps, we're at session highs right now. You're up by 33 points, up 0.5%. NASDAQ 100 up by a third. Dow up 230. And we got the Russell up by 1%. We're coming back with Teddy Kegstad. We'll talk some currencies on a great day, folks. Stay tuned with Teddy. Come back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 22 points right now. We got the dollar at about 98.50. And right now, folks, we're going to talk to Teddy Kegstad. We talk to Teddy every Wednesday at 40 past the hour. You can check out Teddy's outstanding Tiger Forex report, folks. We got a lot going on in currencies right now in this market. Right under the newsletter tab at TFNN.com, folks. You can sign up for that. $97 comes with a 30-day money-back guarantee. You gain access to an archive webinar as well. Teddy Kegstad, good morning.
Good morning, Tommy. One week till Fed week.
Do we have enough moving parts in this market, Teddy, to talk about, man? It seems like, boy, I don't even need to list them, right? We got the Fed, we got Davos, we got everything on there in terms of tariffs in focus. I wanted to kick it off with maybe the yen, if we could. A lot of headlines yesterday about the yields over in Japan. You've been talking about the yen. We were talking about it last week. What do you think about the yen and what's going on there? If we could start there, possibly.
Sure. Well, right now the U.S. dollar yen is up near its highs. It's been in a bull trend now for quite some time. I think it's getting kind of toppy, to be quite honest with you. I see us, over. I think right now is the high end from last week. Maybe not. I think there might be one more spike through resistance. But I would be very cautious. I think now you're getting set for a liquidity trap in a big way. So especially, right now you have yields that are pushing the highs at the highest they've been in a while, in front of a Fed meeting next week. So I would say that just between now and next Wednesday, you're probably going to see a contraction, meaning that the high point in yields probably spiked yesterday in the 10-year and the 30-year. Maybe you'll see another test of that before next week or sometime this week before next week. But I think pretty much you're topping out in yields. You're probably going to pull back in oil a little bit. If that scenario comes to light, I can see the yen getting back down to that 156 to like 155 half area at the very least by next week. You're probably going to settle into a range trade come next, Monday afternoon for sure, before we go into Wednesday, because there are expectations of Powell doing one more rate cut. And of course, if he doesn't, well, then yields will probably stay where they're at, and stuff like that. But I got a feeling that he is going to cut. You'll see a pullback in yields to some degree. Now, remember, if he doesn't cut, whether he does or doesn't cut, then we have 2 months before the following Fed meeting. So then the markets will be free to do whatever they want, pretty much, for before Powell has another chance. And then we still have, then we'll probably have a better idea of who his replacement's going to be as well.
Yeah. And what do you think about the dollar right now? I know you always do such a great job on this segment and within the Tiger Forex report, breaking down those individual pairs. I'm always checking out that dollar index, though, under pressure a little bit. And if you think the yen might strengthen a bit, what do you think about the dollar in general? Or are you looking at just maybe individual pairings? I'm looking at 98.47 right now, that dollar index.
That's a great question. You know what? I think the dollar index is going to be a tough gauge for most of the currency pairs moving forward over the next couple of months. I'd be very cautious with it. I don't think you're going to see major strength or weakness in the dollar. You'll probably see more weakness in the dollar index over the next couple of months, but I would be very careful as to how it's going to get there and how deep it's going to fall. Right now, you do have a lot of strength in the Australian dollar, U.S. dollar trade. U.S. dollar Canada's all over the place, but you have a lot of swings intermittently. You know, they're not exactly trending all with or, you know, in the same way against the dollar or with it, you know, what I'm saying, or if there's dollar strength, you know. So we'll see how that really pans out after next week when we have a Fed, you know, at least when we have an interest rate scenario that we can kind of, you know, hang on. That will help us, give us more direction. But I'd be very cautious with the index as far as a guide, just because, you know, you have a lot of, there's a disconnect right now. You're not getting a lot of action so much. Like we had, Monday was a holiday. You can't really look at that for this week as far as volatility. But now you look at like yesterday and today, the euro and the pound aren't getting as much action as say like the Australian is, you know, so your lesser pairs are starting to gain more momentum in this market moving forward over the next couple of months. So I think that's going to have a lot of disconnect, if you will. So I'd be very cautious with the dollar index.
That's quite an Aussie Australian dollar US dollar chart, man, for sure. You talk about a trend. Always interesting how you break down those pairs versus just looking at the dollar index. Yeah, that is quite a chart, man. You talk about a trend, right? Boy, even just in the last since the November, from 64 up to 68 almost on that Aussie dollar, right?
Sure. Well, now you got to think about this too. What is one of the biggest things that Australia does as far as their economy? And they're an exporter of minerals, especially metals. So,
totally.
There's you know, a lot of transactions are done in Australian dollar that are leaving that country. So that it gives that currency a lift. Now, if you look at the New Zealand dollar, that's had an explosion the last couple of days, but not quite like the Australian. The Australian is at the higher part of its trend. The New Zealand dollar is coming back. It's still below its highs if you go 6 months back. You know, so I think that the New Zealand is not going to be as strong as the Aussie, and that's where you're going to get your disconnect. Whereas the Aussie may continue to make highs, New Zealand, it's barely making this high. It has a better chance of falling back or going into a range trade than the Australian does. You see what I'm saying? So in that sense, where the Dixie would gain strength from or have weakness from the Australian dollar trade, but not so much. New Zealand's not going to help influence that so much. Okay, you know, and then you'll have something where, say, let's say that the U.S. dollar yen stays at its highs, you know, while the other ones are going the other way. So that's another thing that's holding the dollar index up, if you will, in that situation. Yeah. So that's where I'm talking about the disconnect. You can see it in the chart patterns, especially with the volatility, right? I mean, there's the move in Australian dollar was quite significant between Monday, Tuesday, and today, without any major news going on in Australia.
Yeah, it's quite a move, quite a chart, and boy, that New Zealand dollar, you got some serious two-way action in that in terms of, well below still where we were just in July last year versus the Aussie dollar. Hey, what do you think about metals? I got to ask the question, man. Things are going a little wild in that gold and silver market. We're getting headlines, of course, this morning. But as a currency trader, what do you think about gold and silver at these levels? Please.
I think it's a derivatives run-up. I mean, it's gone so parabolic that it doesn't make any sense. It really doesn't. So
Teddy,
I got
thank you so much for letting me know that I'm not taking crazy pills, because I agree with you, man. No, and hey, credit to those that have been holding, folks. You know, it's been like this, but it's at some level, and you got a lot of volume, man. But I don't know if you were listening to me before, just kind of saying, you know, things are right. We have quite the, and I don't know, it's not a perfect storm, but headline-wise, it kind of is, right? You got the Fed, you got Greenland, you got yields, you have, and metals are just like skyrocketing every day. So I appreciate your insight, man.
You know what really worries me the most about the metals? real quick?
I feel for you Bears fans, but thank you for so much joy on watching some of those games, man. I feel for you, but I think you Bears fans got some good future, man. Caleb Williams, that was a tough game, of course.
Sure.
But boy, that was some good football, and you guys got a team for the future, man. I think you do. I know it's tough in the moment, but I think you do, man.
I hope so. Be careful with the medals, though, guys, because too many people that I know are now buying the physicals who never do that kind of stuff. That's when it gets dangerous.
Great insight, Teddy. Appreciate the information, putting it out there for the listeners, man. Always enjoy the segment. Have a great week. We'll talk to you next week, man.
Take care.
Take care. Folks, we're coming right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
The S&P's up by 40 points or 0.6%. The president has concluded his remarks in Davos. And the market, like a little bit of the de-escalation with invading a NATO ally. As NASDAQ's up 0.6, S&P's up by 0.6, Dow up by 0.5%, and the Russell leading the way up a full percentage point. You jump over to yields right now. No huge reaction, though, right? You're right back to where we were yesterday. No huge reaction in yields. You're up by 2 ticks right now, 4.29. On the 10-year, you jump over the dollar. Same thing, not a huge reaction. You back off a bit, 98.47. Gold contract pulls back a bit, taking out some of that premium, but not much, man. We're at 48.60, up by 2% in gold. Silver, though, in the red technically since yesterday. All right. You could have bought silver on the open Sunday night, and you're actually in a losing position right now. Okay. 93.92. So be careful when you think about, where gold is, where silver is, some of the volume. Great advice from Teddy, and I share it. And it doesn't mean it can't trade higher, folks, but on a longer term perspective, at this point, you're getting parabolic. Okay. You're getting parabolic, period. 50 to 95 in a period of less than 2 months. 50 to 95 in a period of less than 2 months. And it doesn't mean that longer term you're not going to have legs, okay? But shorter term, the market's dislocating a bit. Platinum up by 3.2% right now. We jump to copper up by 0.4%, and you jump over that crude market quite a bit. 60.38 on a daily basis. And yeah, we jump over the VIX. 1823, still above average long term, but you talk about a volatility wipeout. 1823, the lowest volatility we've seen so far this week in the VIX. And yeah, how about that 10% number, right? We're at almost 10%. Our man Steve Rhodes, 9.3% and dropping from here, man. It is a risk-on day, and they are not worried about paying for risk because they're not charging you for risk right now. VIX dropping, down almost 10%. Folks, thanks so much for tuning in. Kicking off your trading day right here with me on the Morning Market Kickoff at TFNN. Stay tuned. We got our man Basil Chapman coming up next with the Tiger Technicians Hour. He's in that den growling and prowling. He's ready, coming up right now. Steve Rhodes at 11 o'clock with the Trader's Edge. Fast Market from the Schwab Network at noon. Larry Pesavento live at 1. And I'll see you at 3 o'clock, folks. Have a great day, everybody.